obviously the election is one of several risks that we're facing here towards the end of the year. It probably isn't the biggest one. I think COVID is still probably the biggest risk, and also the unpredictability of the stimulus. But the election right now, the polls are telling us that Biden is very likely to win. The polls also suggest it's a better than 50-50 chance that the Senate will turn towards the Democratic Party. So, that's a risk that we certainly factor in. But really, when you think about how to position for the long term, right, when we look at the data, the party of the president actually doesn't affect economic growth very much at all. And so really, you've got to invest around that election risk. But it does give you an understanding of why near-term risks are much larger than long-term risks right now. The biggest things to worry about, obviously, from the election perspective of a Democratic sweep, is that people will then anticipate higher taxes, not just the corporate income tax, which would probably be a modest increase, but it's that capital gains tax, which could potentially trigger investors to sell off some of these stocks that have risen the most. And so that's why, from our perspective, we want to avoid some of those more expensive stocks and find ways to gain exposure for our clients through individual stocks that are much cheaper, that have been somewhat overlooked, but still have that strong secular growth tailwind.
And one of those is kind of an under-the-radar Amazon play, Zebra Technologies.
Right, Brian, we started talking about this last time, and we ran out of time. I was saying that, think about Amazon as the great white shark and Zebra as the little remora fish that clings to the great white and gets to enjoy, the remains, the leftovers of whatever the great white eats. So Zebra makes the handheld barcode readers that are all over the Amazon warehouse. And so the bigger Amazon gets, the more that Zebra gets to grow. And so that's why it's sort of an indirect way of playing the whole move online. But they're also involved in supplying hospitals with the technology to track patients, and for even in sports to track sports players and their movements on the field, so they can get big data involved in doing analytics on how best to run plays and to find new players. So they're a company that's become diversified away from Amazon, which is a good thing. But it's another example of where you can find secular growth. And to that end, Zebra is a little bit less well known. It's not, one of the cheapest stocks, but it's still trading around the market, whereas an Amazon is trading at, 60, 70 times next year's earnings. So there's a value approach that we take for our clients, and we do get to buy them individual stocks. But then we also want to find income, and Zebra doesn't provide that. Take a look at a Qualcomm and a Broadcom. Still have those tailwinds of that move online, the remote work. You get to play secular growth for clients, and you get to get income. And right now, I don't know if the income investors realize this. Income is still in a bear market. Dividend yielding stocks in the S&P 500 are still down over 25% year to date. So there's a lot of room there for clients to find tailwinds for appreciation while they're getting some income.
Everyone buying the same stocks. Very quickly, Joanne, talk to us about StoneCo, STNE, kind of another Cayman Islands based, most of their business in Brazil, kind of a mid-sized business fintech company.
Yeah, so we really like fintech. I mean, you look at the banks, they're part of the income stocks that aren't doing well yet. They're what we might call smart cyclicals eventually. They're going to really leverage the economic recovery. But the fintechs are part of the secular growth story. And Stone Company is a great example. It serves Brazil and other South American countries, enabling them to move from cash payments to digital payments. And they're one of the leaders there. And this whole industry is relatively new in Brazil. This whole transition from cash to digital followed from deregulation in Brazil. So even though Brazil is still suffering like we are, a big challenge with COVID, they're going to digital, and Stone Company is helping them get there.
Shepard Smith here. Thanks for watching CNBC on YouTube.